You're listening to the weekly wrap-up on Sprott Money News.
Welcome back to Sprott Money News. This is your weekly wrap-up. I'm your host, Craig Hemke, and joining us again today is the man himself, Eric Sprott. Eric, good morning.
Hey, Craig. Glad to be here. Lots of exciting things going on this week. It was a great week for the metals, so let's chat about it.
Boy, I tell you, they're just continuing to grind higher, the mining shares as well. And now we've run into, well, we'll just see what happens the rest of the day, actually. The U.S. employment numbers came in much bigger number than everybody thought, but some of the underlying things don't look to be so good. What do you think here on Friday morning? Are we looking at a breakout or is this a fake out?
Well, for sure we're in a bull market. Gold's gone up over 20%. The stocks are now up 73% from their low on January 19th. So we've got a huge bull market in stocks, very significant bull market in gold. They have it down a little today because of the jobs numbers. But quite frankly, even though they announced 242,000 jobs, which I never believe, by the way, because most of the data that you see, the PMIs, keep pointing to employment weakness. Plus, the layoffs were a lot higher in February this year than last year. So I'm always very, very dubious of the Bureau of Labor statistics numbers in terms of jobs because of the birth-death model and the seasonal adjustments and all that stuff. But the two of the underlying data points you look at is wage growth, negative 0.1%. Hours worked, negative 0.4%, which really means that people on average were making 0.5% less. Mm-hmm. And when you have over 100 million people working and you're making 0.5% less, that's equivalent to 500,000 jobs. There's 500,000 less jobs being paid for, even though you added 242,000 people to payroll. So, notwithstanding the fact that the cabal loves to knock gold down after a seemingly bullish report, I suspect that the fundamentals of gold and silver, for that matter, the buying around the world of this product will win the day in the final analysis.
Like you said, we now moved into official bull market territory, as they like to measure it, more than 20% off those lows of just a couple of months ago. One of the aspects of that now is it's getting a lot of attention around the world. We've talked the last couple of weeks about these massive flows, alleged flows at least, into some of these paper gold ETFs. Again, even just this week, 31 metric tons this week, Eric, into the GLD. 150 metric tons so far this year. What do you make of that trend?
Well, I'm glad you use the word alleged flows, right?
Right.
Because I think we discussed this last week. I mean, we were putting on at least 100 tons a month into the various ETFs. That's a 1,200 ton change in terms of net 1,200 tons that persist. And by the way, as you pointed out, it's rising. Like, we're getting more participation every week going forward here. And last year we had a subtraction of 138 tons from the ETF. So we're sitting here looking at, it could be a 1,500 ton change in one item. We only produce, between mining and scrap, 4,000 tons a year. You can't have somebody come in and buy 1,500 tons and not have the price go up. So it seems very obvious to me that the price is going to go higher. But I don't even know where they're sourcing it, and all the more reason you use the word alleged. I don't know how you go and find that tonnage in a market that was balanced last year. In fact, it wasn't balanced. I think there was more demand and supply last year anyway. And Craig, what's interesting, the most interesting thing to me is we have these commercials who are short $500 billion worth of gold. Yep. $500 billion. And when the market went up, let's call it 2% yesterday, they lost $10 billion in the day. $10 billion. I'm taking the gross short position because there's a long position by commercials, but they got to be different guys. So certain guys are long and certain guys are short. The guys that are short are bleeding. And the same thing in silver. Silver starts to get a run here. We have a huge short position in silver. And I got to believe that looking at mint data and other physical, seeing the money that's going into the GLD, I mean, my God, if just a fraction of that goes into silver, there's going to be a shortage. And I don't know whether we're going to get that commercial signal failure. As you know, it's always interesting to look at the commitment of traders report at the end of the day, which will come out at, I think it's 3:30 today, Eastern time. But I'd love to see that the commercials are capitulating here and actually buying back their positions because it's a losing trade for them. So I just find it very exciting every day. I look at the volume on the GLD and try to take a guess at how much tonnage is going in because some part of that buying is always new buying, and the volumes have been very, very high recently. So if the market wants to get in through this small door, it's a very small door for people to get involved in gold, because it's like less than 1% of all the assets in the world, but it's on the tip of everyone's tongue. We have more and more people coming out in favor of gold at major banks, former people who were bears, now they turned bulls, and we just got to look at the charge into physical gold and realize that it's going to be a tough thing to stop. even though we think the commercials are omnipotent, I suggest that these kind of losses they're incurring might cause them to rethink their position.
That would be a nice thing. Back to this GLD, yes, I've always thought it was rather dubious. I mean, 150 tons just this year, Eric. It's allegedly going to take 7 years for the Germans to get 300 tons, but yet the GLD can get 150 in 6 weeks. Go ahead.
I was going to say, there's a lot of irony out there, isn't there, that supposedly you can just go into the market and buy those tons, and you probably made the best point. How come Germany's only got 100 tons delivered over whatever it is, 2 years already, right? I mean, it's almost a fantasy that theoretically the GLD is supposed to buy that. They probably have commitments to purchase it from the commercial banks, but they probably don't have it, is my guess.
Yeah, good luck. Well, now, again, your funds, which I've always been a fan of, the PSLV and the PHYS, they do own physical metal. They are 100% backed by physical and allocated metal. What is the process, Eric? If this demand continues and the premiums continue to rise on your funds, is there a process by which you can, or at which point you consider doing, I guess would be a secondary offering or a shelf offering or whatever they call that, where you would add to the funds?
Yes. And what causes it to happen is you have to have a bit of a premium to the underlying net asset value in order to pay the fee to the broker who's underwriting the issue. And we're almost in that range now where the premium, certainly on our silver fund, would let us consider something like that. I mean, I'd love to be able to do this, Craig, to go out and do a $500 million deal and go buy a whole bunch of gold. Or even larger, because there's probably huge pent-up demand for those things. We see it in all these stock sales that are going on now. The other way we can do it is have, I think it's called a continuous offering, where if it trades at a premium, and I don't think we've had that approved yet, but if it's trading at a premium, we can just like the ETF, we can use it to go and we can sell it out of our principal account and turn it into silver. I don't think that's been approved yet, so I don't want to rush to judgment on that, but it's something that we can consider. So I think the odds are, I'm just thinking the odds are we'll be able to do some kind of issue this year. I don't know when it'll be, but I think the demand's there. The beauty of both funds is they can be redeemed for physical, and it's not held in a commercial bank, so it's sort of interesting how that's evolving. And I'm very excited by silver here. I just think that silver could explode. And I think you've mentioned this before, they use silver to keep gold depressed because it's easier to push around. But I think the fundamentals will win the day here. The demand for silver is crazy. I mean, if the mint ever produced what the market demanded, I wouldn't be surprised silver sales might double. And the fact that you even use things like that doubling and the GLD buying 1,200 tons instead of selling 130, and my God, it just reeks of a bull market, right?
It does. It does. Would you just let me know? We could go out and sell $500 million, $1 billion worth of PHYS in a heartbeat to some institutions, Eric, and you could move the market. Yeah. It'd be fun to do. All right.
Would be fun to do indeed.
The other thing I wanted to ask you about, again, this is something we addressed a couple weeks ago, but it got headlines again yesterday, and that is your central bank, your finance department, whatever it is up there, finally eliminated the rest of their gold. Now, when I first saw this a month ago, I was stunned to think that Canada only had 1 metric ton left in reserves anyway. But what in the heck? Is this like the Canadian version of Brown's Bottom blowing out the rest of their gold here in early 2016?
Well, we probably had our own Brown's Bottom back in 01, 02 when we sold the bulk of our gold. This was just the remaining little bit of inventory that they're scraping together. And to me, Craig, to be honest, it reeks of, we need more gold. Well, we've only got 1.5 tons. Fine, we need it. And then they sold the damn thing. Yeah. And imagine, here we've had gold going up with India out of the market for the last week because of the jeweler strike. So wait till they come back on board. I mean, I think it would be quite dramatic, but I just think they're just the power that they are scraping the bottom of the barrel to find some physical gold. And in my mind, Canada capitulated. Not that it's not a significant amount of gold, but you think that we sold 1.5 tons. I mean, yesterday we added 5 tons to the GLD, right? Yeah. The day before was 2. The day before that it was 11 or 12. I mean, very insignificant. But I think it's just the powers that be were so desperate for physical gold. They said, we don't care how little you have, we need it.
Does your central bank, or do they guys kind of figure that they're on the same team and we're going to be good Keynesians and the world needs gold and we're just going to give whatever we have left? Or do they figure, we've got so much out in them thar hills, we can always go pull it out whenever we want. We don't need to hold it.
Well, of course, they don't get access to that automatically, right? Yeah. You don't have to sell your gold to the government, so they have no claim on the gold per se. I think they're just, they're one of the central banks. I found it hilarious that they said, well, we could put it in other investments. Well, what other investments are you going to put it in? Some negative yielding something? I mean, come on. Yeah. Are you going to put it in stocks or, there is no other competing investment. This is the only bull market we have going on in the world. So why they would get rid of the last batch is just totally beyond me. But as I said, I think it's just scraping the bottom of the barrel.
Like you said, Eric, it does reek of desperation, as if they're just scraping the bottom of the barrel, getting out everything they can to keep things going. We move now toward next week. Obviously, we'll visit again next Friday, and we're moving toward this next FOMC meeting. Last March, everybody thought, okay, here comes the rate hikes. The prices of the metals were smashed all the way up until that FOMC meeting, and then they rallied for a couple of months. Any advanced expectations as to what you think will happen on the 15th and 16th of March with Mother Felon and all of her band of governors?
Well, Craig, I can't imagine a rate increase with the hours worked going down, with the average hourly wages going down, with all these leading indicators, the PMIs, whether it's manufacturing or services, saying that employment, the hiring is weakening. And, we see it in the layoff numbers. So I can't imagine for 1 second they would raise the rates. And so I don't think gold has to fear that, quite frankly. I think people in the world are in fear of what the central planners are doing. They see the ridiculousness of when the zero interest and now negative interest rates. I mean, nobody's going to leave their money in the bank and pay the bank to store their money when the bank's a risky institution. And we've seen this in lots of cases, right? HSB's numbers were horrible. I think it was Standard Chartered. Some of these banks have had horrendous losses here. And, some of these banks are the ones that are short gold that just dropped $10 billion yesterday.
Yep.
And they're going to lose money today as we see gold popping back up here. And they're going to lose money shorting silver as it goes back up. So these are not inconsequential amounts of money to lose in a day. So I think there's a real battle on. I'm hoping we get to talk next week. We might find out that the commercials aren't insulating, and we could see some very exciting price action this year. Breaking out of this triangle suggests it could easily get to something like 1,400 or 1,350. I mean, it's very, very exciting for anybody in the industry.
So far, so good, Eric. As we've been speaking, the market is recognizing what you said about those employment numbers, and we're back up just not far off the highs of the day of both gold and silver. So fingers crossed. Let's hope the good guys continue to win for a while, Eric, and we'll talk about it again next week. Thanks for your time, and I hope you have a great weekend.
Yeah, well, great. It's been kind of fun for us this year so far, right? And we talked about this at the beginning of the year. It'd be nice to be able to talk about good things happening. They are happening. It's very exciting. It's the only thing that's working, and I certainly will look forward to next week's chat.
Eric, I think I mentioned back in December when we started this might be good luck when you brought me on to do these things. And so I'm going to be
good luck.
I'm going to go with that.
I'm sure that's the whole reason, Craig.
Eric, that's where I'm going to plant my flag in the ground. I'm going with that. Hey, thanks, my friend. And to everyone that has played along and listened, thank you very much for listening, and we'll visit again next week.